Hello, everyone. Good evening, guys. How is everyone doing today? Are you guys okay? Just to make sure, please type below if you can hear me clearly. That will be great. Can you please just type a quick yes if you can hear me? I will appreciate it. Okay, great. So I would like to welcome you to another educational webinars we host here at Admirals, and today we're going to talk about market structure and institutional market analysis. Guys, market structure, it's one of the most important component to a trading profitability when it applies well. Okay, we don't mean that you're going to have only winning trades. However, when you apply proper market structure, you increases drastically your probabilities for higher winning ratios. So here at Admirals, we offer all the CFD products you can find and trade. Okay, and we hold multiple licenses from many countries across Australia, across Cyprus, Estonia, and London, UK. Our spreads are really competitive, so it helps you guys with your trading, and especially for your intraday trading. And right now we are running a promotion, and you can really take advantage on that on the spreads. You can see Euro USD, you can see DAX, there are 20-30% below the normal spreads. Okay, so just make sure you take advantage of that. If you haven't registered yet, you can open your Admirals MT5 investing account. You can invest from €1 if you like, $1, and you can just buy and hold shares, fractional shares for as long time as you want. There are no overnight commissions to pay and all these fees. Okay, just make sure, guys, you follow us on Instagram, Admirals Global. As you can see, you subscribe to the Telegram channel, so you never miss any news events, any major announcements we post on the time. All right, and you're going to get notifications whenever we are going live. Also, really important, the YouTube channels. On Monday, Wednesdays, and Fridays, I'm hosting morning briefings about the market updates. So make sure you subscribe on the YouTube channel so to get notifications prior we go live. All right. As for myself, I assume most of you know me so far. My name is Theo. I'm in this industry for the last 10 years now. I have a background into physics and quantum physics. When it comes to trading, I'm a swing trader. I like to hold some trades, not for a specific time horizon, but until they will reach an area which I consider as a valid area to be out of the trade. Okay. So what's on for today? Today, we will learn how to do the proper market analysis. And I'm not just saying how to do market analysis, I say how to do proper market analysis, because a proper market analysis is going to give you an advantage over many other traders in the industry. Then we will learn how to understand the higher time frame. And when I say higher time frame, because many of you are going to ask me, okay, Theo, I'm trading on a 5-minute chart, which is my higher time frame, or I'm trading on a 4-hour chart, which is my higher time frame. Higher time frame, it's 1 time frame, maximum 2 time frames above your execution time frame. And we will learn, we're going to see many live examples, and we will also, I will teach you how to find precise high probability entry points. Okay, because as traders, we want to get into a move as early as possible and to get out when it reaches a certain level. Okay. Some questions may be arise. So, okay, Theo, why do I need to understand a correct market analysis, and why I just don't open my chart? I see a chart pattern that I recognize, and then I just execute. And why do we need to know where we're going to do analysis, and why I do not do my analysis on the time frame I'm executing? And these are very, very important questions you may be asked yourself or you want to ask me. All right. And there are some very important reasons for that. All right. So the proper market analysis, it will help you first to increase your confidence as a trader. If you just started, if you are still trading on a demo account, if you are trading for 1 month, for 6 months, for 1 year, for 5 years, for 10 years, doesn't matter. We need to be confident with our plan, with our trading execution, and with our approach in the market. And by mastering this information you will learn on this webinar today, you will guys be able to also be consistent with your trading approach. If you start doing random things, you're going to end up having random results. You're going to end up getting a trade which it's going to give you 2-1, 3-1, 4-1, and so on. And you're going to get yourself caught on the other side on trades that maybe you closed too early, or maybe you didn't put a stop loss in the market and it just drags your emotion down. Okay. And our emotional state as traders, it's one of the, again, most important components to trading profitability. So we will make sure through today's webinar, we're going to establish some rules which you can implement straightforward, and it will allow you to take your trading to the next level. Now, I don't usually do it, but this is a webinar that you're going to get a lot of value, guys. All right. I'm presenting you today my methodology, what I use since many years so far, and how do I approach the market. And I'm sure the benefit out of that for you today, it's going to be massive. Okay. I backtest my trading approach. I'm consistent with my trading approach, and I trust my trading approach. It doesn't mean it can be implemented by yourself instantly, but I'm going to challenge you to give it a try. All right. And for those you're going to watch us later on the recording, guys, please make sure you try what we're going to say today, because I'm sure you're going to get lot of trading value. All right. So what do I do when I sit in front of the computer? First, I open the weekly charts. Now, let me clarify that. Now, the time frames I'm going to mention today is based on my trading implementation. I'm a swing trader. I'm going to explain why or what swing trading is for those you may don't know. And I use as higher time frames, the weekly charts and daily charts, and as execution time frame, the 4-hour chart, also the daily chart. But the weekly chart, it's my higher time frame. Then I go down to the daily chart if I have entry points, or I go down to the 4-hour chart to get my entry points. Okay. I don't tend to look the 1-hour chart for swing trading. I don't tend to look the 30 minutes for swing trading. But if you are an intraday trader and you are entering on the 15-minute chart, then your higher time frame, based on what we said, it must be the 1-hour and the 4-hour chart. You do your analysis there, and then you go to the 15-minute chart and you execute. Okay, it's not, it has no value for your trading if you analyze on the weekly chart and you execute on the 15-minute chart. It doesn't match. It won't increase your probability for higher success doing this approach. Just stick to 1 or 2 time frames above your execution time frame. Okay, and this methodology, I'm going to explain here, it applies to all time frames. Okay. So I will share with you my screen and we go to the MT5 platform and I'm going to show you real examples. Is that okay with you guys? So far, is it anything you want to ask me? Please type on the box below if you want to ask me about anything. Let's get rid of that. So, guys, I will just draw a circle here. Please type a quick yes if you can see my drawing. Just throw a quick yes, please, so we can keep going. Can you see my drawing here? Yes, okay, great, thank you so much. Now, the reason I like to use the MT5 when I present my live webinars, it's because it's different to go through textbook examples where they show you the swings like this, it's going up, then it's going down, then it's going up, and we say, that's a point, we enter here, when the market, it's going to come here, and then we take the price and our profit, it's there. Okay, for me, most of the times, this just increase the confusion and the lack of execution by a trader. Okay, I'm talking to you as a trader, which I'm taking trades, I'm in the moment, I do what I teach, so I know where you're coming from and I understand I can associate with every trader's emotional cycle. All right. So I would like to ask to start from this example, the Swiss yen. I will go on the weekly chart. Let me just get rid of all these drawings here. So what do we see on the weekly chart? We see a market that is rising, and right now it makes a higher high. That's the high, so that's our higher high, and that's another high here, that's a low, that's a lower high. Okay, so we do have a market structure which consists by higher highs and higher lows. What does this mean? This means that there is a buying pressure and the buyers are stronger than the sellers in the market. All right. Now, however, we know that no market just going up in a straight line without having any retracements. So as technical traders, we know that a valid point of retracement is this one here, the last swing high. This resistance, it's broken. Now it will act as support most likely in most of the time. So when this price, we expect it to come here, we expect to see a reaction. We expect the market to push higher from this point. But the market doesn't mean it's going to come to a straight line down. Maybe it can move a bit of sideways and it come down in a way that we're going to just see the price moving down, but on this time frame, maybe we're not going to see a push to the upside straight after. Okay, so what can you do to take advantage from this movement here? If you go, you see that you have a resistance. All right. Now we expect a pushback until which point? Until this point here. So we have this room. We have this room to move before we will experience most likely a push to the upside. If we go to the daily chart, we see that the market is behaving now with a series of lower highs. All right. If we go to the and we decided that we want to sell this market because, yes, it's against the prevailing trend. However, we have a very strong price action, the pin bar, which I talked so many times in the past about that. And I hope that you understand how to trade the pin bars. So on the daily chart, we see that the price is just moving down. If we go to the 4-hour chart, we can see this market structure, which I will explain right now. 4-hour chart, the market was making higher highs. Do you see this high is high? It's lower than this high, though this high is higher than this one. This high, it's higher than this high here. So we have a trend line, then the market pulls back to the trend line, and then we have this high lower than this high, so another higher high here. And surprisingly, we see this trend line to be broken at this point here. So the market, we say that on the 4-hour chart, stop trending to the upside anymore. We see the market making a lower low here. This low, it's lower than this one, and is pushing to the upside with a pullback. Now, if we understand that this market structure has, let me show you with this one, it's better. This market structure has a lower point here, which it's a support, which now a broken support, as we said many times, it's going to act as a resistance on a possible pullback. So from this area here, you can start looking for shorts. You have on the big scale this area here to target, but on the shorter scale, you have this low swing point to take your first target. And how do I play this when I'm taking this type of trades? I'm looking to target the first possible swing point. I move my stop to break even, and I just let the trade. If the trade is going to work the way I've done my analysis, then the final target will be here. Otherwise, I made some profits and I'm on a break even, nothing to lose, and let the trade goes. Okay, let's go to see another example. If we go to the Euro USD, because this one, all the time frames, they have a correlation right now, so it's good. So I start from the weekly chart. What do I want to see on the weekly chart? I would like to see the areas of support or resistance, the areas which they are relevant to where the price is right now. If we see, guys, the price, it's around this level. So there is no point to go and look for a resistance up here. Okay, we have to be close to our trading, to our current price trading. So I can see this low point here, regardless it's 2016, doesn't make any difference. It's still a swing in the market, which is obvious. So as traders, we have to take this in consideration. We put our support zone here, and we will go now for the other thing, we can recognize that this market is trending lower. What's the definition of a downtrend? A series of lower highs and lower lows. Okay, so ideally, if the weekly is trending down, I would like to take only trades to the downside, ideally. Most of the times, that's what we do. There are times that we can take the counter trend trades, like the Swiss JPY I just described, but that's only because the weekly showed a strong price action reversal on a resistance level. Otherwise, we don't attend counter trend trades. Let's go back to the Euro USD. So on the weekly chart, I drew my support. I will draw as well the nearest resistance zone I can see, and it's this swing here. Sometimes, guys, it's good to flip on the line charts, and you can see the swings more accurate. Like, let me zoom out one more time. Like this one here, you can see this low point. If you are a very beginner trader, I highly recommend you to use this approach. It makes your time a bit faster, okay, when you're analyzing the market. So what we want on the weekly to see, if we can, first, you can write this down, draw your support and resistance, and identify any pattern with series of lower highs and lower lows, downtrend, like this one here, or higher highs and higher lows, uptrend, like this one here. That's the first thing we do. Then I take it one step further. I go back to the candlesticks. I zoom in a little bit, and I try to see if I can see any price action which indicates a continuation or at least short-term reversal. So far, we saw a price action last week. The market closes with this bearish engulfing. However, because it was sitting on this major support, I didn't initiate any positions right after. Okay, so what I would like to do, I would like to go to the daily chart, just zoom out just a little bit. We see this structure here. We see that the market is stopped making lower lows at this point. It pushed back. We are in this range. Okay, so because, guys, we want to participate in the trade as a seller based on the weekly chart. So on the daily chart, we would like to go and see where the market is making lower highs and lower lows. Until today, we didn't have this. Today, we have a massive break. We are currently on the New York session, so the sellers are still aggressive since the early morning, since the London session. So ideally, we would like to see continuation on this move and to participate in the market. Now, just to make sure that it's clear to everyone, we will never, as traders, be 100% on the picture we see on the chart in order to initiate any positions. Regardless if our checklist, the one I just shared with you, it shows that, okay, first tick, second tick, third tick, fourth component tick, I'm ready to participate. We still need to make sure our risk is appropriate in order not to get surprised by any reversal against our positions. Okay, most of the times we're gonna still have that thought, is it a good trade to take? I see my checklist, everything applies, but should I take this trade? That's the nature of trading. We are in a probability business like most of the other business, but this one here, because we cannot control as retail traders the price afterwards, we manage our risk in order to make sure with the consistency we're going to experience the result we want to experience. So what I'm looking for this market to do, I will go to the 4-hour chart, and now I have my plan in place. After this consolidation here, finally the market broke. The sellers were so aggressive, if you can see from this candlestick, sellers so aggressive, which they didn't pull back immediately, and they are keep pushing lower. That's fine. I'm going to keep an eye, and this is going to be on my watch list for the buyers to step in and try to push the price higher up to this level. And here I would like to be a seller in this market. Okay. Now, maybe the price will never retrace back here, but again, that's my plan. That's what I've backtested for so many years. That's what I'm trading for so many years. And I'm confident that if the market is going to come here and it's going to give me the pin bar or the engulfing bar, I will not hesitate to execute this trade based on my risk parameters. So let's go to another example. Let's clean the charts. So what we do first, we go on the weekly chart, and what we're trying to do to put our support and resistance close to the current price. So the price is here. I see these areas of support. It was this one here as well. We can see we have 1 touch, 2 touch, 3 touches. It's a significant area. Then I go to the daily chart and I try to adjust them a little bit if they need to be adjusted. Okay, to this swing point here, that was the last point. So instead of take this in consideration, I will take this one because that was the recent one, and we see that the price is just skyrocket. And then this one here, it was somewhere here, the last price. Okay, and again, guys, sometimes I draw accurate on the edge of the candle. Sometimes when there are many candles close to each other, which they create some moves like this one here, I just draw the line somewhere to make them as relevant as possible. But remember, we always treat the support and resistance as areas, not as accurate points, especially in the Forex market because of the volatility, obviously. Okay, so on the daily chart, we readjusted our lines. Let's see on the weekly chart if we can identify any clear pattern. Easier if we flip to the line charts. What do we have here? We see the market made a lower low, made here, that was a lower low, that was a low, that's a high, that's a lower high. We have now lower low, we have lower high, so we start looking for shorts. The market is keep pushing lower. I'm sure everyone on this webinar can see that this market is drive lower. All right. So if we go back to the daily chart, we had this consolidation. I talked about this extensively on the morning briefing sessions. And 2 days ago, on Friday, it was this candle here. And I talked about that. I said, when we see this close here, which happened at the end of the session on Friday, and we also observed it on Monday, we said that any pullback around this area, I would like to initiate some short positions. And let's go on the 4-hour chart to see what happened. On the 4-hour chart, we can see that we have this structure with a clear lower low. That was a high, that was a lower high, a lower low, a lower high, downtrend resume. So I marked this area here and I was ready to participate with a right price action. And the trade I took on this market, it was this almost engulfing bar. So entry here, stop there, good risk reward for this trade. Okay, if some of you were on the webinar and you took this trade, congratulations as well. It played out really well based on our plan. So recap, we go on the weekly chart, we draw our support and resistance zones. Then we try to, that's the first thing. Second thing, we try to identify a pattern, lower highs, lower lows, or higher highs, higher lows. At this particular market, we identify the lower highs, lower lows. So we wanted to find short plays. Let's see if we can find them on the daily chart. On the daily chart, it was a bit unclear until the break. So once we had that break, we wanted to see the retracement back to this zone and to find a good entry point. A good entry point came on the 4-hour chart. Sometimes it comes on the daily chart. That's why I leave it a bit flexible with the execution. It's going to be either on the daily or on the 4-hour. Depends which one has the right price action set up. And then on the 4-hour, we had this price action set up. Another pair we can see is the pound JPY. Pound JPY, where are you? You're here. This is a good pair because it's a reason I choose this pair to demonstrate you today, because the market behaves differently with the pound Japanese yen. On the weekly chart, if we have a look using the lines, we can see that the market made a higher high here, but at this stage, it tried to pull back a little bit and it was unable to sustain a close higher than this area here. And now if we flip to the candles, we can see clearly this rejection here, which create a strong move back to this level. I'm sure everyone can see it. And we can also see on this attempt from the buyers to take control in the market and create the new impulse move, they were unable to do it so. And when the price approaches this level here, the sellers stepped in and pushed the market lower. So the buyers, they didn't manage to close above this zone here. What does this tell us? It tells us that we have a strong resistance somewhere these levels here. We can draw this box up. We can use this box here as our resistance. Now, we know that the market it reached a top and it's selling off. That's the information we have so far. We don't have an information of a continuation, and we don't have an information of a reversal right now on the weekly chart. Let's go to the daily chart and see some more detail. On the daily chart, here we have the move from the buyers to try and close higher than the zone here. They didn't manage to close higher. You can see that the sellers stepped in here. The market sold off rapidly with very big candles. Usually when we see big, strong candles on the opposite side, it means sellers are aggressive to sell this market. When we see candles relatively small comparing to the opposite candles, it means that the sellers here are not as strong as the buyers. If you can just by looking the body of sellers and buyers from the impulse moves and the retracements, you can understand the inside strength of the buyers and the sellers. Okay, so when I saw this, I was on alert for a possible reversal. However, the market came down to this point here. The buyers, they stepped in aggressively with this combination of a bullish engulfing candle and a pin bar at the same time at an area of support, and the buyers pushed the market higher. Now, once the buyers, they came up to this area here, they were unable to put a new high in the market. So we saw that the market start selling off slowly and steadily here. When I saw this lower high, I went down to the 4-hour chart to see if we have a change in the market structure, like we have this consolidation here, kind of uptrend. Okay, we have this, and all over the sudden, we see this move happens. An impulse move to the downside, break any lower support that was considered valid at this moment, and the bears, they took control. Now, I was sitting on the sidelines waiting for a retracement back to these levels here, somewhere around this area. And from this point, I participate in the market because we had this new lower low and lower high structure, downtrend. So sometimes as traders, we want to see on the weekly chart the same higher highs, on the daily, the same higher highs, on the 4 hours, same high. We have to understand that by having a specific plan in place and do the proper like institutional market analysis, like the one I'm describing right now to you guys, you can be more calm when you are trading. You can expect some price moves, and if some price moves they never happen, then it's okay, because we know that they're going to be multiple of other currency pairs and assets to trade. All right, recap on the pound JPY. On the weekly chart, we put our areas of support and resistance. We have this lower point here, it can act as a support. Then we have these lower points as well, they can act as supports, but they are very far away from the current price. So I prefer to keep everything simple. I identified on the weekly chart this resistance, this support, and if we go down to the daily chart, we can see that the market, as we said, was unable to put a higher high from this point onwards. So the sellers, they start pushing lower. Now, this swing, it's not very obvious on the daily chart, but if we said to ourselves, okay, we understand that this market, it's the buyers are not in control because 2 times they tried to take over and they were unable to make a higher high. First time here and second time here. So I would like to look for a possible sales, but I'm not going to be aggressive. I would prefer to target the first possible support, and maybe if it's on your plan to target, to take partial profits and then target more zones and areas, that's another scenario. So we move down to the 4-hour chart. We see that that was the daily bulls unable to make a higher high. So that was the buyers. They again here tried to create a trend, unable to make a higher high from here to there. And at this particular moment, we saw a lower low, valid lower low. We have strong bearish candle in the market. So we want to be sellers and only sellers here. But where we want to sell, we want to sell at a fair point of value, which it's like this support zone. I believe that everyone can see this support zone here. Okay, so from this point onwards, we can sell. We can, if you take profits here or profit there, just make sure you protect your trade at this point, okay, because we already sold off. However, for a reason, I didn't participate on this market and I participated on another New Zealand JPY. You can see here, and I will tell you I sold here. I'm still in the move. I left. I was about to take the profits here, but for the purpose of this webinar, I just put my stop to break even. So I have a risk-free trade and I have my take profit target a bit lower, so I could demonstrate you this analysis. And as I said, guys, the live market analysis is what I prefer to show you through, so to put you directly on the right path instead of giving you the accurate textbook examples, which in the actual market implementation is not exactly as we read them from the books. All right, so on the weekly chart, you can see the weekly here. I draw the resistance. We can see that the buyers tried to push the price higher. All the sellers, they were sitting here and they sold up from this particular price level. So market doesn't make higher highs. Let's go to the daily chart to see if the market is going to make lower lows and give us opportunity to participate. We see that the buyers, they try to, again, to reach this point here. They couldn't close above and make a new high. Sellers stepped in. Buyers, they tried to make a new high at this point here again, and they were unable to close even higher than the last high. That's the high, and that's a lower high at this point because they didn't even manage to make higher high from this one. So at every try from the buyers to create new highs in the market, all the time they get stopped by the sellers and they are forced to move lower. So I went down to the, once I identified the structure, so I said to myself, okay, I prefer to sell this market if I'm going to see on the 4-hour lower highs and lower lows. So this market clearly made a new low here. So that was a low, and that's a lower low. And that was the high, and that was the lower high. So we have this trend line as well. We have this support zone, you can see. So we have trend line number 1. We have the support zone number 2. So a pullback here. At this point there, I entered the market. My stop was somewhere here. I believe I'm in the trade for at least 1-to-1. Okay, now the stop moved to break even, and I'm waiting the market to do its thing. Whatever it's going to do, I have my take profit in place, and we are waiting for the outcome. So where we are sitting on €265 profit for this particular trade. I risk only 2% at any given moment on my trading activity. Sometimes I risk 1%, sometimes I risk 2%, depends on the market structure. Okay, now I'm not going to go in this webinar about that, but I will make another webinar for later on for this particular subject. So again, the idea on the weekly chart, we structure the market, we put our supports, resistance zones, we try to see where we have a market structure, if we have, and if it's a structure that we can recognize, if it's a pattern that we can recognize. There are moments in the market like this one here. Let's say if you forget about this, okay, forget all this stuff, just focus on this one here. We see the market, it's moving higher highs, and we want to participate to the upside. By looking right now at this information here, for many of us, it's not very clear a picture about who is in control right now at this moment. We know overall we are in an uptrend. We want to go down to the lower timeframes to find entry points, but on the weekly chart, we don't have anything to guide us that the retracement is over and the buyers maybe stepped in. Like here, guys, we had the guidance that the buyers, they got stopped out. You see all this pin bar here, 1, 2, 3, 4, 5, 6. The 6th pin bar here indicates that buyers stopped out. Sellers tried to gain control, but they didn't gain control. Buyer again stopped out. Buyer again stopped down. Again, finally, sellers came massively in control. Now, buyers, they again stopped by sellers here with this pin bar. So we expect at some point, at least in the short term, that sellers, they're going to take control and they're going to push the price somewhere lower. Then we go to the daily charts and we try to find the higher highs, higher lows, or lower highs, lower lows, to see the market structure we want to see in order to participate in the particular direction we choose based on the weekly. Okay, the higher time frame, note this down. The higher time frame, we use it for direction. and the lower time frame, we use it for entries. All right, higher time frame direction, lower time frame for entries. I've decided that I want to be a seller at this market right now. So on the daily chart, I didn't have any particular clear swings to indicate selling, but on the 4-hour chart, we had this clear lower low, and then on the retracement, I just enter short, okay, for the second lower high. So if you as you realize so far, I use the exact same approach over and over and over and over and over again. Maybe I'm participate in less trades during the week. Maybe I will open 5 trades instead of other traders, they open 10 or 20 trades. But because of this very thoughtful market analysis, I'm confident to risk a bit more, like 2% on my trades. So my overall outcome, it's really good based on what I choose to trade, okay, and based on my trading style. Guys, I would like to see if you have any questions so far. We have a few minutes left. Please type your questions below. Let me know if it's something it's not clear, if you would like to see something more on the charts than what I show you now. That's a great question from Kola. Kola is asking, is it a must to wait for a pullback? Now, we know that, let me go back to the chart. So, let's bring this up. So we know that in trading, a pullback most of the times occurs. And what does a pullback give us? Give us an advantage to participate in a better position in the market. Because if you see many traders, what they do, and I used to do it at the beginning as well. And if you're doing it, I completely understand it's normal to do it. And if some traders, they say, I never do that, I find it very hard to believe it. At the beginning, I believe that most of us, when we see these big candles breaking this support, because we don't want to be left out, we just start entering here, we enter here, we say, all these sellers, they are here, they close lower here. So we expect that a new seller is going to come to the market, keep pushing the price lower. That's very, very rare to happen in the market, especially in the Forex market. Usually the Forex markets, they tend to retrace about 50% of their moves. If this is an impulse in the market, about 50% retracement, it's expected to be happen. Sometimes we left out without big retracements for us to allow us to participate, but most of the times it's a good approach to wait for retracements and do not just rush to go after a big impulse move. If you see here, guys, if you see here, this bullish move happened to the upside. If you was waiting for the market to come somewhere here and enter here, instead of chase the market and just open a position here or open a position here, it will be more beneficial for you because you could put your entry here. You could put your stop below this low point here, and it can give you a more than 2-to-1 reward to risk ratio. That's why I recommend to wait for the pullbacks. It's not a must, but most of the times helps a lot. Okay, so let's go back to. So guys, whatever I showed you today and whatever I shared with you today, it's based on the way I trade so far in my trading career and what I do teach. It's the way entirely I see the market. Okay, if you have a different approach, it doesn't mean it's wrong. And also that was not considered as a personal advice to anyone. It's just for educational purposes and informative purposes only. Okay, so I don't see other questions on the chat box below. Guys, that was all from me so far. I wish you to have happy trading this week. Please make sure you subscribe on the YouTube channel because you're going to get notified when I go live in the morning. If you have the opportunity to come and participate on this morning briefing event, you're going to get, trust me, you're going to get a lot of value about the information. You're going to have the opportunity to ask me whatever you want to ask me as well while we live review the markets. Sometimes I open also trades if my trading plan is in place at that particular moment. So it's on Mondays, on Wednesdays, tomorrow, and on Fridays, 9:30 Eastern European Standard Time. Okay, that's all from me so far, and I wish you happy trading again. And hopefully to see you tomorrow morning on the morning briefing session. Bye for now.